All right, TBD podcast with Ryan McGuinness today. He is the owner of RPM Realty Investments.
Correct.
Welcome to the show, my man.
Thanks for having me.
Appreciate you doing this.
Yeah.
So we were just talking before the show about the current market, interest rates, how everything's all messed up. And you mentioned you've maintained your interest rates for your borrowers.
Yes.
What made you make that decision?
We're at 12%. We've always been at 12%. We don't need to squeeze the last dollar out of them. It's been a good relationship. It helped grow the fund for the last 10 years or so. We're really happy with our trajectory that it's going. So we just want to keep that business, booming per se.
Good on you guys, man. I mean, I feel like every other sector is shot up, especially hard money traditionally, right?
Sure.
That's like 13, 14, 15% now.
Yeah.
Deals almost don't make sense.
It's tough. It really is.
Yeah. Do you get borrowers coming to you guys, trying to figure out the numbers? I mean, how do you guys underwrite your deals?
Yeah, typically, so we're an asset-based lender. Specifically, we're looking at loan to value. So we want to know what their property's valued at, determine that, or we can usually do it ourselves and figure it out. But yeah, oftentimes they come with us and we're transparent. Sometimes a borrower will come to us with the money down, they're ready to go, and we're like, well, why are you doing this deal? By the time you pay an origination fee and your interest and taxes and insurance and headache, you could just put money with us or get a CD, and be a lender on a deal and go on vacation and make basically the same, if not more, and definitely have less headache.
That's the issue with some of these commercial properties, especially multifamily, right? Like, the stuff is still selling at like high 5 and a 6.5 cap. If it's a good deal in a great location, you're never going to get debt that low.
Sure.
Like, these guys are having to put 50% down on deals to make it work.
Sure.
But you guys maintaining rates, are you still seeing people put the same amount down, or kind of maybe walk me through the structure of buying a property through you guys? And maybe we can use $1 million valuation or $1 million purchase price.
Right. So as I said, we're strictly asset-based lending. We're not pulling credit. We're not pulling tax returns, no income verification, things like that. On a nice single family home, we'll lend up to 70% of the property's value. So, on $1 million house, somebody would have to put down $300,000. If it's commercial or multifamily, typically up to 65%, or if it's raw land, typically we lend up to 50% on that.
Does the property, can you own or occupy the property or no?
So it has to be closed in an LLC. We're commercial notes. So beyond that, what they do is on them.
Interesting. Yeah. Yeah, that's kind of a no-no, right? Is that like a federal regulation?
Correct. If we're having a homesteaded primary residence, we'd have to do the same underwriting and guidelines that a general bank would do. So at that point, we'd have to have debt to income and all those ratios and minimum credit and et cetera.
Interesting. I would imagine business is good in this market, right? Debt at a commercial bank is 8% plus. Hard money's going crazy. You guys have maintained rates. Have you seen a huge uptick in your business?
Yeah, I think there's a natural growth there just in our company, but also, yes, correct. When we were 12% and banks were 3%, people were like, you're crazy, because there was a huge spread there. Now, conventional loan is 8%, oftentimes higher than that for any kind of hybrid or, a jumbo or multifamily or things like that. So, there's a very narrow gap now between hard money lending and conventional lending.
And then do you require there to be a renter? Back to that $1 million example, let's just say it's $1 million rental property. Do you require some sort of an income for that property to match the debt? So
we don't, which is rare for us, because at the end of the day, when we make that loan, we're okay getting that collateral back at that level. We're not going to be an owner-operator. We're not going to put a lease in there. We're not going to put a tenant in there if we got the property back, right? Ultimately, if we did have to go through the foreclosure, we're just selling the property at the auction or potentially getting it back and selling it right away. So us specifically, we're different in that regard. A lot of banks and even other private lenders, hard money lenders, would want to see that, but we do not.
Potentially going to take back a property. Is it based on a lower market value that can sell the property quickly, or are you guys in the business of potentially keeping a portfolio of these properties that you unfortunately have to take back?
Yeah, we do not want to operate. That's my past and what led me to this. So we really just want to know we can exit at a fire sale. Yeah. And we work with our borrowers. Things happen. We are not the type of lender that wants to take your property, and we exhaust every effort of them to get rid of it on their own or figure something out prior to racking up, attorney's fees and even proceeding with foreclosure or anything close to that.
Yeah, because that adds a whole can of worms, right? I mean, you would rather that borrower, hey, sell the property, pay us back, move on.
Exactly. They probably put down 30, 40, 50%. On average, our portfolio is around 57%.
Wow.
So, we're getting on average 43% down. So God forbid even a job or health or divorce or something crazy happened to them, out of their control, or the good people, we would say, look, sell your $1 million place for 900 or 950 and get back up on your feet. You got a few $100,000 in money sitting there for you and move on to your next project.
Right, yeah, because the borrower has a good amount of equity.
Absolutely.
As long as the market keeps up, which I believe it will.
Yeah.
What do you think is going to happen in the lending space? I know it's kind of a crystal ball scenario, but it seems to me, now you guys are healthy, right? 57% you mentioned. I mean, that's an extremely healthy position to be in. Do you think some other lenders that are in your space won't do as well because they're attached to institutional debt or they're attached to lenders around the country? You guys seem very hyper-local.
Yeah, it's all about the underwriting. So there is definitely private lenders and many other lending programs that were lending 80, 90% plus rehab, things of that nature, where I think if the market turns around or if things get skittish, that's the lenders that will have the issues. And a lot of those lenders are already having issues or are pulled out of the market. There was a lot of institutional lenders coming to town from California and New York, slinging guns down here, getting a bunch of properties and borrowers, and I think they're definitely in trouble now.
It seems like development is where those problems would arise, right? Because, there's a land acquisition and then construction costs. Usually that lender has a ton of money out there before that developer might not have the same skin in the game. Is that where you see a turning point?
So that's the difference between, credit underwriting and checking your borrowers, what deals they've done, where you have to put a lot more faith in the borrower. Nothing that there's nothing wrong with that way of lending, but that's just not what we do. But that's definitely where I think you'll see issues, right?
Yeah.
Yes, the guy was good. Yes, he had 5 properties that he flipped. But things turn around, or something unforeseen happens. I know that 57%, I'm completely fine owning our entire portfolio at 57% in any scenario.
Amazing, right? Yeah, it would take some serious correction for that portfolio to take a hit.
And even then, if there is, right, say there's a true 40% correction, first of all, we'd be at par in our notes overall. But you really lost 40% in your stock portfolio, or you really lost 40% in your rental portfolio, where us would still be getting interest every month or potentially the property.
Right.
So I'm very, very happy there.
Yeah, that's a good position to be in. It seems like over the past 2.5, maybe 3 years, Tampa has been on this extremely bull run in real estate. It's definitely softened up recently. But almost anyone and everyone could make money in development, right? Like you could buy any piece of property a few years ago, put a new house on it, sell it and make money. So I think those guys and those lenders like that just had some fire business model where they go in and they buy property and they develop it. It seems like if the market turned, those are the guys that are going to get hit.
Sure. And that's already happening in a lot of other asset classes. For a few years, it didn't matter what you bought, whether
multifamily too, especially.
Even outside of real estate, you could have bought a brand new Lamborghini and then sold it for $100,000 more. You could have bought a Patek watch and sold it for $100,000 more, or Bitcoin, and anything. Yeah. It didn't matter. It was too easy. And now I think people are realizing, I got to actually work and realize what's going on with my money. You can't just blindly. For years, did you see Dumb Money that came out a couple weeks ago?
Dumb Money, no.
Okay, it was about the GameStop stock and all that.
I gotta watch it. Is it on Netflix? Or?
It was in the theaters. I'm not sure what else it's on, but it reminded me of how dumb money was for a while. You could just blindly do anything and make money.
It was crazy, right? Like remember the NFT thing and the metaverse and like all those bullshit investments were making a ridiculous amount of money. Pokemon cards was a big deal. Yeah, now you have to be at least a little bit savvy to be in a good position. But I think Tampa here is so insulated where we're almost still in that space where as long as it's a good location and you buy it for a good number, you should be okay.
Yeah, I agree. We have a lot of protection from people moving to the state, people moving to Tampa, just natural growth in Tampa. I would not want to be owning a lot in New York and California, a lot of these states where people are coming from down here. I think Florida and Texas, has a lot of good communities. So even as the market softens or could even go down, I think you might see much more stability here than anywhere else.
Absolutely. How did you find your way to Tampa?
I moved down in 1987 when I was a kid with my family. Moved to Valrico, and then pretty much I've been downtown or around downtown since 2008. So I love it here.
2008. Oh my God, there was nothing going on downtown Tampa in 2008.
Yeah, once things closed at 5, you couldn't. There was nowhere to eat. There was nothing. Yeah, there was nothing to do. You had to go to the outskirts. But yeah, downtown it was literally. I lived next to the old Fly Bar, and there was nothing going on.
Yeah, on Franklin, right?
Correct.
Yeah, that's a cool little area. I always like that little spot. The brick street, the old historic buildings.
Yeah.
Where did you live around there?
It's called the Residences on Franklin. If you were facing the old Fly Bar, it was to the left. It was like an 8-story, probably 30-something unit condos.
That's a nice little building, man. Have you seen that building?
I think so.
It's really cool, and actually, you used to be able to get them for good prices too.
I think I got the building low. I paid $72,000 for my unit there.
Oh my God, $72,000.
Now they're probably $400 or $500. I don't know.
Unbelievable. Yeah, I had always, so growing up in Tampa, I had always had a vision for the city. I always thought we would have an incredible growth pattern, and it started a little bit during the last recession in 2008. You saw like Trump Tower got announced and Sky Point and Element and all these buildings were being built, and then the crash happened.
Sure.
But I always had a vision for our little urban core. When you moved here and you started to get into real estate, did you say, damn, Tampa's like a hidden gem?
Yeah, I wish I bought everything and never sold anything. Prior to the lending, when I was flipping and doing construction, we could buy a property for 40 and sell it for 60 or 70, and now those properties are like 300, right?
Crazy.
But yeah, downtown, and again, just the land value around Channelside, you could pick up something for maybe 100,000. That's probably 3 or 4 million now, because it wasn't the place to live there. People didn't really have, I don't think, the vision. I mean, I didn't to the extent that we are today of what would come. It was started with Sparkman Wharf, I forget what it was called, but the bowling alley opened up there when I was in high school, and it was like the place to be, and now it's kind of just ballooned from there.
Yeah, Sparkman Wharf was a game changer. Tearing down that front wall on the water, I don't know why they didn't do that from the beginning, right?
Yeah.
My dad would always joke around, like, why would they build a development with retail and close off the water view? Like, that's the stupidest thing ever.
Yeah.
And then Venick bought it and tore it down. So how did you transition from your construction, flipping, right, rental property into lending? I guess start from the beginning, right? Like, when did you get into real estate?
So around 2009, a friend of mine was flipping houses. I had raised some capital and invested my own capital back then. He did most of the work, and we had a kind of a joint venture agreement on getting things done. Then started doing the flipping on my own, and then transitioned a little bit to new construction, single family. Between flips and single family, did a couple hundred houses here in Tampa and around the area. 2016 or so, the market had been screaming up for 6 years at that point, which I thought, wow, that's a while. It went up another at least 6 years, but at that point, I saw value in lending because we could still get a good yield, but it takes the risk off the table for us with our down payments.
Wow. So you kind of came at it from a financial perspective in that you had a partner that was doing the heavy lifting in terms of like the construction and the actual flipping, right?
Yeah, I kind of learned from him and then started doing it on my own really and transitioned off and had other partners and a bunch of different projects.
Yeah, and now you guys, like you said, exclusively do lending.
Correct, yeah. We found that at some point, like currently right now, we have 246 active loans on our books. If I had to have 246 flips going on, I'd have to have a 10, 20,000 square foot office, had to have dozens or hundreds of employees. I'd have so much headache and risk and theft and, just a ton of risk to things out beyond my control, where I feel very comfortable in the lending space, and it's much easier to manage and scale up.
And it's really interesting to me because you had that idea, right, to mitigate that risk, really take that risk off the table. Now you don't own toilets and tenants and be responsible for all these people. It almost seems like that today is more true than ever, right? With the way, I don't know, interest rates are and the way the market is. Lending seems like a very safe bet today.
I agree with it. There is guys that can work hard and find the real deals and outperform for sure, but at what cost, right? At what mental cost, at what physical cost, where, there's a certain yield that we have achieved that I'm happy with Could I make an extra couple points, or if I was just out there working my ass off every day, all day on projects? Possibly.
Right.
But the quality of life is a lot easier this way, and I'm completely happy with where things are going.
So today, if someone's not in the real estate business, let's say they're an attorney, they have $1 million saved up, they're afraid of the stock market, right? Stock market's volatile. I can go put $1 million in a CD and get a 5.5% return, which is unbelievable, really. What does that look like for your investors if they gave you $1 million? Break down kind of how I would get my money back, my return schedule, that whole thing.
Sure. So they would know specifically what deal they're getting in. So if you see on the screen, those are all the deals we have. So they wouldn't blindly send us money. I would call them. I would fully underwrite the deal first. So if I'm emailing them, the deal is 100% in my opinion. So I would send them over that deal. They would review it. They would fund that part of that deal directly with the title company or the closing attorney, wherever we're doing the attorney. Typically, our borrowers are 12%. We take a servicing fee, so it nets the lending partner, double-digit return. There could be some upside in the default there. Could be some upside if we get the property back. But generally speaking, they're going to be about a 10% return to them. So they're going to get interest payments every single month. All of our notes are 2-year balloon. So prior to that, they'll get their principal return, but it could be as early as a few months. On average, they're going to see their return in around 10 or 12, 14 months. But during that time, they're getting that interest monthly.
That sounds like a great deal.
Yeah.
So are you seeing a lot more investors come your way because of the way the stock market is and the volatility and other investments?
Absolutely. I mean, in the short term, the stock market has been up recently, but if there really starts to be a turnaround, that's where you're going to see it. And people just sometimes can't grasp it. But let's just use 10% return, for example, at a 50% LTV, and say the stock market's at 30,000, the Dow, right? I'm guaranteeing you the Dow next year is going to be at 33,000 and 36,300 and so on, for year after year after year. However, if the Dow went from 30,000 to 15,000, you're still on par with your note and getting back 100% of your money. So whereas you've lost 50% of your money in the stock market, you're still totally fine. So when you put it like that, which is what it really is, it makes sense.
Right.
So it's not conventional. People don't maybe understand it at times, and there's nothing wrong with investing in the stock market, but it's very difficult to outpace 10% in the stock market.
Oh yeah.
And almost always, as a retail investor, you're doing stupid things. You're buying at the high, you're selling at the low. You're panic selling.
Right.
And you're buying when the very top. So I doubt that you're going to make those returns anyways. But just to say you're a savvy investor and you are, how much time are you putting into that? How much you're watching all day on your phone, or you're at work, you're watching it. You're on a date, you're watching it. You're doing this, and you're at the football game, you're watching it. All those things.
It's not fun.
Yeah. Or you go on vacation and you look for the ACH on the first of the month to hit your account.
What I don't like about the stock market is it's so intertwined with international politics and news and companies going under and who they appointed to be the CEO. There's so many factors, whereas I feel like this model, right, for an investment is so much more solid, especially here locally.
I thought I was looking at the mirror when you were saying that, because that's exactly how it is, and it's so true. Prior to real estate, that was my background: stocks, bonds, options, things of that nature. And you could get company news on something and the stock tanks, and they realize, oh, it was the same person with the CEO's name and it was the wrong person. Sorry, everything. And meanwhile, you had options and you just lost, all your money on it.
I think I had like 10 grand in stocks at one time, and years before that, like $500. I've never played at a big level, but
Sure.
Dude, like you said, just on your phone, checking the ticker, like complete obsession. It's not a fun feeling.
No.
It really is not a fun feeling. So I would imagine, like the example, the attorney who just wants to be an attorney and has money that he wants to put in his retirement, they want to put it in a place where it's extremely passive. And all those stocks are passive. There's a headspace component that it fills up that makes you a nervous investor.
Sure.
Which I wouldn't like.
And it's not automated, right? So your stock goes up. What do? Do you sell because you want to get your money, blocking your profits?
Right.
Or do you buy more because you think the stock's going to continue going up? So it's very active even if it's passive.
And then these investments, so you mentioned that when someone invests with you, they're actually investing in a specific asset. It's not like I just write you a check and it goes in this general fund.
Correct. They would know exactly what houses that they're in. They would have final approval on that. while I underwrite everything, because most of our people, are 100% passive. They, for some reason they didn't like a land deal, they can just pass on it and we'll get them in the next deal. It's not a problem. And then their capital returns, their principal returns after that deal is paid off. So they get their money back. They can decide if it's for them, if they want to continue, if they want to grow. I mean, all of our lending partners have just continued to snowball, and that's how we've gotten, to the almost 90. I think this month we'll hit 90 million in total current loans on the books.
That's amazing. Is that typical in your business to actually, have an investor be on a specific asset?
There's a few ways to do it. Some lenders just pool everybody's money, but I like the transparency of knowing exactly what you're in. You don't own a door or a doorknob on 50 different properties. Like, what you're in. You can go drive by your house and look at it. Tell your friend, hey, I'm the lender on that.
Yeah.
You know exactly. So, not to say one is right or wrong. I'm happy with the way we're doing it. There's not a lot of red tape. There's a full transparency, and it makes for an easy business.
Well, it almost is like, you can be a real estate investor without, having a lot of that risk, like we mentioned earlier, right?
Sure.
Like, I think a lot of people, especially here locally, like real estate as an investment. So this is a good way to get in that's extremely passive, where you can actually identify properties you're invested on.
Right, exactly.
So what is the biggest deal you've done? Do you guys have a limit in the money you lend?
We don't have a limit. Our biggest current active deal is $5.8 million. It's a big warehouse off of line ball. Typically, it would be limited by a person's down payment, right? So it's not a lot of people have $2 million to put down. Also, at that level, hopefully you'd have some sort of institutional lender who would be a little bit cheaper than us. Most guys that are playing in the multi-million-dollar space should have bank lending relationships or more conventional lending relationships or equity partners that are to that level. Not to say that always, but a lot of times.
Do you know David Clemens, BKC Lending?
Yeah, I know him well.
So I used him on a building I bought on Highland Avenue, and his process, it sounds similar to yours. I don't know the differences between y'all's businesses, but I would almost go y'all's route, you, David, this private lending route versus conventional, just because it's not a pain in the ass.
Yeah, we're very similar to our underwriting. I don't know their exact guidelines, but we have co-funded deals before. Those are good guys over there.
Oh, cool.
And yeah, there's huge value. We have guys that are totally bankable, conventional, have tons of money, great credit, but they don't want to deal.
That's where we were at.
Or the 30 to 45 to 60 day underwriting,
right,
where we have closed deals in 0 days before. We've never heard of the deal. You call me. Typically, that's because a bank has screwed up a deal, and you need to close today, or you're going to lose your $50,000 deposit.
Exactly.
So everyone's scrambling, and they'll call us in the morning. We'll call our attorney and say, you got to get on this right now.
That's the advantage.
We get it done. So we like 5 days, 10 days. That's plenty of time for us. But if we had it in an emergency, we can get stuff done in 0 days.
I think you have to have a lending partner like you in this market, because there is a lot of competition for buyers.
Sure.
And if I'm getting conventional financing and I have the same offer price as another buyer, I'm probably not going to win the deal as the other buyer who's working with you that can close in 2 weeks.
100%. It's the market is a little bit less competitive now, but going back a year, 2 years, when it was nuts, totally bankable, conventional. This is when rates were low too. They would use us to secure the property, and we have no prepayment penalty, right? So they use us to get the loan, and then in 30 to 60 days, they refi out with their bank, but they got in the house, right? Because families just couldn't find a property. So people were using that. We hadn't seen that before, but going back again, a year and a half, 2 years, 3 years ago, we would see that a lot where people would use us and then refi out.
Yeah, you really had to a year and a half ago.
Yeah.
The market was so bananas. What are some significant things that you've seen in the market? We have had, this incredible shift over just the last 2 years. Like, what are some surprising things that you've seen in your space?
Going back to COVID, people didn't really know, right? Was it going to tank? Everything going to tank?
Right.
And it ended up being probably a huge boom. So that was a little surprising. I think interest rates at these levels surprised everybody, but I think it shouldn't have, right? Historically, we're about average. The problem is, for the last 15 years, 14 years, people only know up now, right? And, how old are you?
31.
Yeah, so your adult life, you've only seen an up real estate market. Maybe, in your teens, you were looking at something.
In high school, the recession happened. I wasn't really paying attention.
Yeah, so right now, people are like, I'll just buy anything and it'll just go up. So who knows but people they can't fathom a high interest rate, just stable, which is healthy, real estate market, so.
Yeah, I'm curious to know what's going to happen too. I've heard both sides. I've heard interest rates are going to go down, and I've also heard they're going to go up. My prediction would be that they'll either stay level or tick up a little bit.
Yeah.
And that's just because I don't think the Fed's understanding of inflation, I don't think that they think inflation is going to slow down.
Right.
I would imagine that they would think if they reduce the interest rate, prices will kind of go back up and inflation will increase. And really, we know that's true, right? We're residential brokers. We know that if interest rates were at 6% tomorrow, you'd have a flood of buyers coming in.
Absolutely.
I think a lot of people are on the sidelines right now because of high interest rates. They're choosing to rent. They're choosing to not make the move. If you had lower interest rates, those people would just jump back in the market.
Yeah, naturally. I mean, my little brother just bought his house and he was around 7% for a conventional, but it's what he had to do, right? But yeah, if you saw something down at 5%, you get a gold rush on mortgages again.
Well, when was it? Was it in the early 80s? Or I think it was the early 80s when interest rates were like 18%.
Yeah.
Right? Like a credit card, buying a house and putting it on a credit card. And a lot of people say, well, houses were $50,000 back then, which they were. So do you think interest rates will go that high? 15%?
I don't think so. That was, uncanny time. I think that was a fluke. Who knows? You can't never say never, but I think around here is just more of what normal was that people didn't realize. So if they maintain around here or drop or increase, people will get used to it. People figure it out. It's a little painful, but yeah, life goes on. You have to get things done.
That's right. Yeah. And I think that 8% does hurt, but it's not a killer.
Sure.
It's not going to kill our economy. 12%, if your rate was standard, conventional, that might be a problem.
Yeah, just slows things down, right?
Well, what do you think is going to happen? Do you think it's going to go up or down?
I think we probably maintain around here. I don't see us going to a true double digit. I'd say around here is okay and somewhat healthy. I know people don't like it, but here plus or minus 1. I think we probably stay 7 to 8.5, somewhere in that range for some time, maybe a year.
Yeah, that makes sense. I want to talk about how you guys get paid back, the 2-year balloon. What would happen if banks, well, not really a what would happen question, but it seems like banks are less inclined to do cash out refis and those sort of loans. Is that typically how your lenders?
It depends on the borrower. Our borrower, there's many different reasons. Some are investment where they plan to exit it in 3 to 6 months. Some just wanted some cash out. So it's really hard to say, but we do see obviously refis. We see properties selling. There's a lot of reasons that somebody would pay us off and have the ability to do so. So it's not one single thing.
Do you have a program in-house that has some sort of a long-term debt?
We don't. This is the only program we have. Typically, we do a lot of business in town. So typically whoever refers us over the business, we will then send the deal back to them to cash out the or conventional refi.
Yeah, that makes sense. Yeah, do you ever see yourselves adding different programs? I mean, you could extend this lending arm pretty long, right?
Yeah, I don't think we will. I don't want to be in a 30-year fixed. I don't want to be in a 15-year fixed. My lending partners like the short duration of it. We have a really smooth and good program that we've just grown exponentially, and I think I'm just keep going there. I mean, who knows macroeconomically what could happen to maybe change that, but I don't really see it. I mean, even in a down market, our program works and I'm happy with it. If real estate starts going down 5-10% a year, which I don't think it would in the long term, but we're still okay to lend, in these parameters, right, in that kind of market.
How did you guys set the entire thing up, right? So in the beginning, you were flipping houses. Let's go back to that. And before the show, we were talking, you actually have a family business, right? Your brothers are involved.
Correct.
So, was it your idea that you brought to them? Was it theirs? You guys kind of all came together? How did this whole thing get set up?
So it kind of just happened naturally. We didn't have a blueprint or a plan. Again, I saw value in a tangible asset like real estate, but I was tired of flipping houses and doing construction. People needed capital for some other deals, and we kind of just started there and snowballed it from there. So it was my older brother Kevin and myself originally. My younger brother James, was pretty young at the time. He was just in college still. He worked here at a transportation firm in Ybor, and we took him on once we kind of got on, and now he runs all the payments and closings, insurance, and the whole back end of everything. So
That's awesome.
It's a great relationship. My older brother underwrites a lot of the deals. We all bring in capital and find borrowers, so it's a very nice relationship between all of us.
How do you typically reach out to those borrowers? Do you do advertising?
No, we've spent zero in advertising forever. It's all referral based. Because somebody, when they go to Bank of America and Bank of America closes their loan, no, they're not telling all their friends and family that Bank of America closed their loan because it was supposed to happen. When you have your family moving down from New York in a U-Haul with your dog and your kids, and you're closing Friday, and you sold your property in New York, and on Wednesday Bank of America says, hey, listen, I know we've had your file for 45 days, we're not going to be able to close now. And they're like, what are you talking about? I'm moving down, I'm in the U-Haul. And we get that call on Wednesday, and we close them, and they move in on Friday. They're telling everybody, right? They're telling everybody, and the broker that almost lost the deal, the agents that almost lost the deal, the title company, the attorneys, everybody was about to work for free for 45 days. So we close that deal, everyone gets paid, and they're going to go tell everybody as well. So it really sells itself on the need. We really solve a lot of problems for people, and we're an asset-based lender, but with common sense. So we can figure out a solution to pretty much any deal that has equity in it. We can cross-collateralize things. There's a lot of things we can do as long as the equity's there.
Is a big part of your business saving those deals?
Yeah, people aren't coming to a private lender or a hard money lender typically because they had an offer of conventional financing, right? They're coming because they need to get a deal done. They've been let down by their bank or some other lender, and they need to get the deal done still, and they typically need to get it done very quickly.
Yeah. Do you guys, so is 2-year balloon, no prepayment, is that your standard package?
That's our standard. Some other lenders are 6-month or a 1-year balloon, but we don't want to put the burden under pressure of the borrower where, hey, a deal took longer than normal and now you can face a foreclosure or you got a refi or whatever the case may be. So we kind of give them 2 years, but if they want to pay it off in a month, no problem at all.
Dude, it really seems like you guys are like the opposite of a loan shark. You're like a lone teddy bear. I mean, every question I'm asked about, taking a property back or why a 2-year balloon, it's always like, well, we don't want to put pressure on our borrowers. I love that. I think that's awesome.
You'd be surprised. All we ask is for communication. There's very rarely a situation that we can't communicate and figure it out. When our borrower puts their head in the sand, doesn't communicate, then of course we have to file a foreclosure and go through,
right. That's
attempt
a part
to go
of the nature
through.
Of the business.
Exactly. Right? But if you call me and say, man, I'm not going to have a payment for 3 months, but this is why. I have this property, it's selling, here's the contract on it, it's listed. We probably won't even charge you late fees or anything like that.
That's amazing.
Yeah, we just want to exit it and have you come back to us, and you're going to tell all your friends and family about that too.
From an investor standpoint, if I'm putting money with you, right, on a deal, do they ever put pressure on you guys to be more like bullish and try to aggressively take a property back, or? Not
typically. Ultimately we would call them but they're reasonable people. We like to work with good people. Yeah. So if we had a lending partner that was like that, we'd probably select to not work with him any longer.
Got it.
And we're making them a good return and that they're happy with. So typically we will guide them as to what to do. If for some reason they were like, no, I want to do this, and they have the majority of the money in the deal, then we're happy to do that as well. But we're not trying to burn any bridges, and we want to have a good reputation too.
So you guys are really selective on both ends, who you're taking money from and investing in, and then also the real estate, and then as well as the borrower.
Absolutely. We've been fortunate to have good lending partners, and those guys are happy and they're really easy to work with. If somebody came and they weren't easy to work with, we don't need their money, we don't need their capital, so we would just choose not to do business with them.
It seems like right now, especially in this market here in Tampa, there's a ton of opportunity for development still. Do you guys ever do your own projects?
Sometimes, and usually at the end of that project, I'm like, what the hell did I do this for, right? Because it's the same return anyways, and it was taking up 90% of my time and all that. So there's occasionally a home run deal that comes around, and we're like, man, we should really do this. And by the end of it, usually about one a year, we're like, why did we do this? We should have just done nothing.
It's a whole different ballgame, right? I feel like the lending space, it sounds easy. What am I missing? I don't know. Maybe is the reason why there's a lot low risk because of the required down payment. The borrower's putting down, it sounds like a minimum of what, 40 or 50%?
Minimum of 30% on average, 43%. The hardest part is finding the borrowers, really.
Yeah.
It's the deals aren't complex. Banks try to make it super complex. all we're trying to do is lend our money and have a safety net behind it, right? We're not checking a box. There's so many scenarios of deals that I see that a bank will turn down that it just doesn't make any sense, right? Like the guy wants to you buying $1 million, we'll use that one for example, buying $1 million condo, he wants to put down 90%, he wants to put down 900,000. So he wants to borrow 100,000. Every day, all day, of course I would do that deal. Where a bank's like, oh, well, he changed jobs 6 months ago.
Right.
You know, he changed jobs to a more profitable job, but since he had a lapse of income, you know, they'll deny that deal. Like that's a deal that just don't make sense. But a bank has to operate that way.
That happened to me. I owned a condo free and clear, and I wanted to pull out a few $100,000, and I think it was still like, I don't know, I would have had like 70% equity or whatever it was, and the bank wouldn't do it because I'm a self-employed guy. I don't have a W-2.
We see it all day long. We see it.
So they come to you. Do you do cash out refis like
Sure.
that, short term?
Absolutely. Yeah. Well, I mean, there's no prepayment penalty, so it can be as long as they want, up to 2 years.
So someone could come to you and say, I own this building free and clear. I want to pull X amount out.
Yes.
And you'll get that same kind of a deal, right? 2-year balloon, no prepayment.
Correct.
That's
All the same terms, up to that 70% value if it's a single family.
I would imagine you see that a lot. Guys come to you with an asset. Help me pull money out of the asset. I want to buy another asset.
Yeah.
Right?
Yeah. And like I said earlier about cross collateralizing, you know, somebody may own a building now. They want to buy a building. They're cash poor, but, you know, asset rich. And we put a lien on the current building in lieu of a down payment on the new one. So there's $0 out of pocket, you know,
That's
to finance that all in. There's, you know, no closing cost as far as cash.
Yeah.
And we just leverage their current holdings to do new ones. Like I said, we get creative. If there's equity there and we can communicate about it, we can get it done.
And then it's almost like a portfolio loan, right?
Sure.
Where you're taking someone's kind of assets and saying, where's the equity? What can we pull from where to buy this new piece?
Exactly.
Interesting. Very cool. I'm kind of in that position now. Maybe we can talk after the show. But
There you go.
Or online. I don't really care. That building I was talking to you about up in Tampa Heights, the one with David.
Mm-hmm.
So he has a 1-year balloon.
Yep.
I'm going to have to figure out a way to go to a bank and pull money out to pay him back. But it almost seems like banks are pulling back on that.
100% they are. Everything. Their lines of credit, their mortgages, they're definitely tightening. You're going to see, I think you're going to see a lot of projects get funding halted and not be able to perform or complete the project, I think, in the next, you know, now to next couple of years.
So in this situation, I could pull money out, pay him back. Do you require, you know, a place where the money's going? As in like, hey, you know, pulling out $1 million, 400 of it's going to David and the rest is going toward this new asset I'm buying.
It depends on the asset value. So if the asset value supports the loan amount, then we don't care. We're just trying to protect our capital. So as long as the asset value is there, up to X% that we feel safe at, then we're good.
That's the real separation between you guys and the conventional banks. The banks want to scrutinize the borrower and really look into kind of the income and what they own and all this sort of stuff. You're strictly an asset lender.
Correct. We're not even pulling your credit. We're also not going to show as an obligation on your credit. So, you know,
oh, really?
Yeah, our loan, unless there's some sort of delinquency, wouldn't be reported. So it looks better for you for your obligation. So when you go apply for something else, that mortgage payment isn't on there because, you know, that's what they're going to look at. Oh, he can't afford this because he has these payments due every month. Well, they're never going to see our payment.
Interesting. And then new construction wise, you guys are not really in that space, right?
So typically, you know, we'll just lend on current as is value. So an example of how we could do that is, you know, a guy bought a piece of land for $400,000, owns it free and clear, right? And he's doing a $600,000 construction cost on it. Well, we can say, okay, we'll lend 50% on the land and give you $200,000 to start your project, and then snowball that up to complete the project. So depending on the LTV and how much cash he has in and the land value, we could potentially do it. But it's a very low portion of our portfolio, only a few percent.
And then would the same work with a value add property? I'm buying a property for $1 million. I think I can put $300,000 into it, and then it'll be worth $2 million.
Yeah. So we could get an appraisal or look at it at that point. Lenders don't love to see, hey, I bought it for $1 million, put 300 in, and now at 1.5, right? They get scared of that.
Right.
But we will take a logical approach. And all of our deals, we underwrite them pretty much same day. So you're gonna know. I tell people, they're like, I'm thinking about doing this. I'm like, well, send it. Do you have 5 minutes? Like that's all it's gonna take to you know. Now if a guy sends me 5 deals in a row that are out of this world, and I'm like,
You sound like you're a guy that's in love with the deal. Do you personally look at these deals that come across your desk?
Absolutely.
Yes, so you're not sending them off to some underwriting team.
No, me and my two brothers are going to look at it, and
awesome.
and we're gonna give you an answer. If it's complex, we might need a day on it. If it's normal, you'd be surprised. In 5 minutes, we're like, yeah, people are like, I'm approved, and they've been dealing with a bank for 4 months on it, right? So they're like, they think it's like they don't believe it, right?
Yeah.
I just had a lady.
That's what happened with David. I was like, what the because I've never done hard money lending.
Yeah.
It was my first experience. And I was like, this is so much easier than conventional. This is insane.
Yeah, I had a lady on Friday, she called me, and she's been dealing with a couple different banks for 4 months, and she owns a property free and clear, and she has cash as well, and land free and clear, and she has cash as well, and she wanted like $500,000 for a bill, but she's going to get started, with money, and I think she paid $200,000 for the property. I'm like, yeah, it sounds good. We'll fund it. She's like,
really?
What? How could you do this?
Oh my God. Yeah, and I think as the conventional market gets tighter and tighter and tighter, and banks really pull back, you guys are going to do even better than you have been. You guys have been doing great too. I saw you were on the Fast 50 scroll down, Tyler. What was it? Fast 50 fastest growing businesses in Tampa Bay.
Correct.
That's amazing, dude.
Yeah.
That's awesome.
Yeah, that was a good deal. Happy to get the recognition there, get our name out there.
Well, you guys deserve it. And I think and from what I'm hearing from your story, you really had the idea before the market took a turn in your favor, obviously, right? I think it sounds like as the conventional market gets more unadvantageous for an investor, people are going to turn in your direction.
Yeah.
But you kind of saw that before this market shift occurred.
Yeah, so there was obviously, when we shifted to lending, there was another 6, 7, and who knows how many more years of just straight up, right? So I exited early per se in that regard, but I'd rather be early than a minute late, because once things turns around, that's when trouble comes, and I'm completely fine with our lending portfolio in any scenario, even like a 08 type deal, which I don't think will happen, but
No.
we're okay with it.
Especially here. I think, if you watch the national news, you'll see some markets that take a big hit in the next 24 months. Especially as the election heats up, people get a little hinky, people exit contracts. We see a lot of buyer apprehension during those politically volatile times.
Sure.
Which I think will happen, but not here.
Yeah, real estate's a big decision for people, so when there's any kind of turmoil, they back up and just kind of wait and see what happens.
Yeah, absolutely. So we were also talking before the podcast about the Motor Enclave.
Yeah.
That is an interesting development to me. I had Brad on the show, and he was explaining how the way they found the Tampa market to build that was through an algorithm. So he looked at all the markets in the entire country, like every metropolitan area. And Tampa had the most indicators of car enthusiasts out of the entire country, beating Miami, beating LA. I had no idea. When I first heard of this...
That's my use, on the left there.
Yeah, when I first heard of this, I thought it was a crazy idea, but as I learned more about it, I love it. I think it's incredible. So you actually own one of these condos. What made you do that?
Correct, yeah. Brad is a genius. I don't know how he pulled this off, way above what I would ever dream to be intelligence-wise, getting this done. But somebody approached me about investing in the project overall. So I'm like a very, very early day one investor on it. And then I also have a unit with a couple partners, that end unit there. So we're really close to the convention center and the end of the straightaway. So it's a premium unit, from day one I was in. So
That's now an investor in the project, or you mean purchasing a condo?
Both. So I'm an investor in the project, and then I bought a condo in there as well.
That's bold as hell, because conceptually, right, on paper, it's kind of a... Did you see it as risky? Like, is this really going to work?
Yeah, absolutely. It was one of those ones where I thought I was going to invest, and I thought at the end of it, I was going to be like, what the hell did I do that for? Right. But no, it turned out well. But I'm a car enthusiast. Again, going back to Brad, the intelligence he had to pull this off, because you're dealing with so many regulations, and it's not just, hey, I'm building a single family home, right? I'm sure in some development you've done, it's a nightmare dealing with government agencies. Well, he wanted to put a racetrack here,
right,
and car condos, but they're not really condos, and then all off road. If you look to the right there's I don't know how many acres. I think the whole project is 200 acres, and there's 100 or something off road acres. So like Can-Ams and side by sides and all that. You can kind of race there. Has a skid pad. There's Brad on the right. Kind of has everything. So it's a pretty wild concept, and I'm excited to see it progress. There'll be a Vegas style pool. Things will be open, I think, everything by 2024. But I race there regularly now. I just did my first off-road event there last week, so there's a lot going on.
Were you driving one of these things?
I have not. That's the cross cart. They're trying to get me to buy one of those things, but I wasn't. Me, my partners and I got a Can-Ams. We got 2 Can-Ams, so we got a 4-seater and a 2-seater. So.
Yeah, Soul Design Studio, the architect, Carlos Molnar, I had him on the show too. He was the architect for the event space they have here. So he was familiar with it. He was explaining the design, and I can't believe Brad was showing me some of the condos. People are putting some money in it.
It's going to be crazy.
So tell me about yours. Do you own like a single unit?
So it's a double unit. We combined, took the wall out. So it's about 2,700 square feet on the bottom level. Once it's all built, it'll be about 5,000 square feet. Studio Detroit, who's doing a lot of design. We're in for permitting now, so the design is done. Wish I had a copy. I could show you up there, but I don't have a way to access it now. The design is done, and we'll be building it out soon. I imagine it'll take 6-12 months, and it'll be good to go.
That's awesome. Have you always been a car enthusiast?
I have. Yeah.
Just since a little kid?
Yeah, exactly. Going to car shows with my dad. Outside of this, I got another warehouse that I'm going to be almost done. It's way behind schedule, but almost done with it. That I can store cars, and then also people want to, a private indoor garage space.
Yeah.
Climate controlled. They can pay a fee to store their car, their monthly little hangout spot, and all that.
Seems like a really popular business model in the last 2 years. Like the other one, Paddock Garages. Mm-hmm. Like they're opening.
Yep, Paddock one, and then I think there's one in St. Pete as well.
Yeah.
It is. People have, especially as you get more downtown high rises, you get one spot or maybe 2 spots where people have that extra Ferrari or Lamborghini. They probably don't want to park there, generally speaking, but also don't have a spot for it. They need a place like this to put their spots.
It makes sense.
Well, yeah, both of them were a passion for me. They weren't, I'm a car guy, so I did them as a passion, and if they turn out to be a business, and I mean, the price of the Motor Enclave has skyrocketed anyway, so I'm glad I bought that.
Well, I think as Tampa, as we keep our shitty road system and potholes, I think you guys will do well, because no one wants to drive their Ferrari on the streets around here, man. It's pretty tough. My Jeep has a tough time, bro.
Yeah.
Yeah. What's the oldest car you've owned? What was your first, collector's item, car-wise?
So my '61 Lincoln is probably, I believe I've owned the longest. Yeah, I don't remember.
Do you have a page where you have your cars?
Yeah, if you pull up High Society Motor Club, they will show you. I think there's only about 10 or 15 cars in there. I think I'm at like 35 cars right now. It's an addiction I need to shed, but it's fun. It's a fun one.
Now, how long have you had the Lincoln?
I'm trying to think. I guess I had that since 2008 or 9. I have to look.
Scroll down, Tyler.
That's the Lincoln there.
Right
Yeah.
The black one.
Yeah.
Oh, perfect.
So people do wedding driveaways and wedding getaways, and I don't.
Tell me about the High Society Motor Club.
Yeah, so I don't rent them out like Toro. Like, you can't just have it for the day, because people don't know how to drive old cars, right? They'll overheat them, or they want to know why there's no power windows or manual transmissions or any of that stuff. But a couple got engaged, and a couple had a wedding drive-away.
So you can rent them for photo shoots.
Exactly, more just props, or at the end of your wedding, we'll drive you away in it. That sort of thing.
Look at that '70s Porsche. That thing is sweet, man.
Yeah, it's a '77 turbo.
So are you going to keep all of your cars, or at least most of them, at the Motor Enclave?
Actually, the other warehouse will hold about 90 cars, so probably the other one that I had mentioned.
Looks like you need a few more.
Yeah, exactly.
90, you got to fill that thing up, man.
Maybe one day.
What's your favorite car?
It's hard to say. It's like having a favorite kid.
Right.
I don't know. There's I don't know. That Porsche is pretty badass.
You don't seem to have a look or like a niche car you like. You have everything. I mean, you've got the classics, the muscle cars, the Land Rover, the Rolls.
Yeah, I'm always finding crazy deals on things. So typically you're not going to get a good deal on a '69 Camaro or '69 Mustang. Everyone wants that, right?
Yeah.
It's always like a Fiat or an Alfa or a Land Rover, just something.
Like that Fiat.
Yeah,
I like that thing.
Dude, that thing is awesome. That thing's awesome.
Look at that.
It looks small, but you can fit 4 people very comfortably in there.
Those are all over Italy.
Yeah.
If you go to Rome, there's like 100 of those driving around.
Yeah, and I got the old, a lot of old Jaguars. So just things that fall through the cracks of these different auctions I go to, that I can pick them up for a deal and have fun with them.
Do you have a wife, girlfriend?
I have a girlfriend, Kaylee.
What does she think about all this?
She's pretty understanding of it, actually.
She's like, oh no, Ryan bought another car.
She is like that. No, she'll come home and I'll be in the garage, like getting something delivered, and detailing or something, and she'll come home from work and be like, "What the hell is this?" But she gets it.
Oh my God, that's awesome. And I love this thing, this Shelby. Click on that, Tyler. That thing's badass. That's quick.
Yeah, that's a factory. Factory 5 is a company that makes those. It has some crazy engine. I think it's like a 488 big block. I bought it from a 70-something-year-old man who had it done ground up, and I can't believe he owned it, but good for him.
So actually, Brad told me the largest private collection of Cobras is here in Tampa.
Really?
By an individual owner. Yeah, 140 something.
Holy shit!
Do you remember what he was saying, Tyler?
No, I don't.
Man, I was like, whoa, really? Yeah.
Look at that thing.
Look at that engine, dude.
The bloodshot eyes.
Amazing. 570 horsepower, almost 600 torque. That thing probably rips, dude.
Yeah.
So, are you going to expand the car business? It sounds like it.
Again, it's just 100% a passion of mine, and I have these cars, so it's kind of just fun to do. Right. I really don't have any interest in making it a business.
Yeah.
Because I'm very protective of the cars. I don't want to have like random drivers and things like that. So
you would get that too,
yeah,
right?
Yeah,
like
absolutely.
100%.
Yeah, and people, again, me driving these cars over years, I know everything about their little quirks, but even if I had a trusted friend drive it, he just doesn't know. It's like your child. You know that thing, right?
Yeah,
so.
I totally hear you. I mean, I just have a Grand Cherokee, and I barely let my wife drive. I can't imagine putting it online and having random people drive it. I would be so afraid.
Yeah.
You mentioned too earlier about back to the Motor Enclave. Meat Market, something like that, was involved.
No, yeah, I'm an early investor in Meat Market.
Oh,
the
cool.
Tampa one, yeah. So obviously
that's awesome.
That was a huge success. Another thing that I kind of went on the outskirts, of real estate for.
Right.
Happy I did it. I wish I did more. But it's been, nobody could have predicted how well it's done. But
they have exploded. I mean, you go there every night, that place is packed. And amazing lunch too. Like they have I think it's a bison burger. It's like a bison beef mixture burger. It's phenomenal. I love Meat Market. So are you involved in the new one in Boca too?
I am not. They presented it to me. And again, just being outside of the Tampa market, I really try to support Tampa businesses. So I passed on the deal, but I'm sure it'll be very successful, and a lot of the current investors are probably in that, but I am only in the Tampa location.
No doubt. So any other investments, cars, Meat Market, real estate?
I try to support the Tampa economy. I've been in some other local deals, some other startups. Some are still going on, and hopefully they'll have success, but nothing out right now.
You do. It seems like you invest in things that interest you. I think that's awesome.
Sure.
Right? Like you love Meat Market, food, it's a Tampa business, cars, the whole thing. It sounds like, any idea, that came to you that was interesting, that was a part of the local community, you might be interested in.
Sure.
So is that kind of your mindset? You're always open to new ideas?
It is. I always am. I'm always happy to take 5 minutes with anybody to talk about anything. As the lending business progresses, I'm like, why the hell did I do that? But, I should have just stick with the lending, but it's boring. It's exciting, but it's like not sexy. It's way cooler to show you Meat Market and way cooler to show you a racetrack. I could show you somebody's note and mortgage and be like, they paid me, and that's it.
Right.
So.
Well, it's probably a great business that can support other endeavors that you may have.
Absolutely. And the connections that you meet on both sides, right? All these other people, I'm meeting dozens and hundreds of people that may be lending partners, they may be borrowers. So it's just good to immerse yourself in the community and meet a lot of people like that.
100%, man. Well, listen, this was a great episode. I appreciate you coming on.
Yeah, I got a present for you.
Oh, you do?
You ready for it?
Break it out. What do we got? A present? What is
Check
this?
that out. Open to the tab. I think you might like it.
1953. No way. Yearbook?
Yeah, open to this tab here.
What tab? Is it on the top?
Recognize anybody on there?
No way. I see Joe Greco.
Is that not your Greco?
No.
Oh shit, I thought it was.
But I believe Joe Greco, wasn't he on city council? I think he was, I'm probably going to get this wrong. I'll have to ask my grandfather. But I think Joe Greco was the chairman of city council while my grandfather, Dick Greco,
Yeah, that's it. So I
was
thought
mayor.
I thought he was in that book because didn't he go to University of Tampa? Your grandfather?
He actually went to University of Florida and taught at the University of Tampa.
Gotcha.
I think this is one of our cousins, though.
You have to check it out.
Dude, thank you for getting me this. This is so cool.
I was gonna come with a vintage Greco tee, honestly, And then I saw that there was no teas available, and then I saw that, and I was like, yeah, I'll grab this instead.
Dude, Ryan, thank you. This is so cool.
Yeah, actually, I looked in it for 2 seconds yesterday, and just checking out people, like what they did back, what is that, 70 years ago now?
Yeah.
And like how they did it at the University of Tampa. I kind of wanted to look some people up, like
absolutely.
the voted most successful and see where they did and just a bunch of things like that. But I thought it was pretty cool, so I wanted to give it to you.
Well, listen, I appreciate that. This is so cool. I'll have to bring this to my grandfather. You know what? There's Dick Greco, and there he is right there. Joe Greco was on a different page. Here he is. Dick
maybe
Greco.
I mismarked the page. Dude, I was very confident.
Dude, that's him.
You got to be so confused. I was very confident it was him, and I must have mismarked the page there.
No, you're good, man. Here he is, Dick Greco. There he is.
It's a picture, right?
Handsome bastard. Yeah. What is this? 1953. I can't wait to show him this. As far as I know, he went to the University of Florida, and then I believe either came back and finished at UT, apparently, if he's in the yearbook.
Yeah.
But I know he taught at the University of Tampa also. Fascinating. Ryan, you're the man.
Thanks for having me on. Appreciate you guys.
Listen,
Thank you, man.
If people want to find you, follow you, get involved as an investor or borrower, how can they do that?
Yeah, Instagram's probably easiest. Mr. McGuinness, so it's MRMCGUINNESS is my personal, or RPM Realty INV, like invest. So Instagram, most people have that. They can reach out to me. That'd probably be the best way.
Beautiful. Ryan, you're the man.
All right, thanks guys.
All right, appreciate it. Bye, everybody.